Prudential offers called the PruEduSave for myself. Okay, yes, true. I'm also an insurance sales agent.
Sure.
But the reason why I got it is because it combined all three levels of financial development into one. It combined the saving bit, like I said. Then it combined investment. Investment means that it will be multiplication, but there will also be bonuses. Then it combined a very critical bit which many people run away from, the aspect of protection.
Okay.
Protection.
How is it offering that protection?
Protection means that should I face a challenge, and the challenges that we talked about were two specifically. The challenge of unfortunately having permanent disability.
Okay.
Permanent disability, number one.
So they guarantee that they will cover the rest of the policy for
They'll
you.
cover the rest of the policy, you get it?
Okay.
Or if in the unfortunate aspect of death, they'll also cover the rest of
The policy.
And
by what percentage annually does maybe the insurance policy go?
like, I've not understood that question.
Is there maybe an interest rate of
Yes, there is an interest rate.
How much?
Like I have the interest rate that our insurance policies offer at Prudential is 3% of the sum total.
What is that exactly?
Now, normally, what I love about, for
Sum
example,
total is, if for example, if I've bought a life insurance policy of 1 million, so they are covering it's growing by 3%.
No. We get that because what you're going to pay as 1 million shillings, because we are going to in Uganda we rate it per month or per year.
Okay.
Now you may say I'll pay 1 million a month, or I'll pay so much more per year. Now I'll get that money, then multiply your final amount, create your final amount, because given the period you're going to like subscribe or save for. Okay, so if I create that amount, that's what we call the sum assured. If your sum assured is, let's give an example, your total that at the end will be roughly, let's say 50 million. Total at the end will be how much?
You tell us.
Let's just go 50 million, 20 million. I'll get that and then multiply times 3% each year.
So now my question is, I'm coming from an investment advisor thought plan. Would you advise then a person instead to invest in a treasury bond of per se 25-year bond, and then get a life insurance policy that can be covered, that whereby the at least the annual two payments from the 25-year bond can help cover the life insurance policy? That way they are getting cash flow and also making sure that they are covering the life.
No. Look. It's very important. Like I say, every part. Let me get it from me. Every part of the financial equation is very important, because for your day-to-day living, you need cash flow. Let's not pretend about that. You need it. I mean, you're not going to live you don't live in a, what do I call it? You don't live in a world without bills. You live in a world that has bills. You need to pay for you, I see, you pay for your transport, for your lunch, for everything. So
as a prudential marketer, you advise treasury bonds first and then use the cash flow to cover the life insurance.
To get a life insurance plan, okay? Yes. Otherwise, even not only that, in whichever investment aspect you grow, and I'm saying, because you're talking about treasury bills and bonds, which is good, okay? But even if someone chose something more physical, like maybe say, let me buy a border. Okay, then I give it to a young person to ride it, and then I'll get so much per day, per month.
Until now, why I look at treasury bills and bonds is, you look at the greatest liability of a border is the part of having to actually manage the person as well.
Oh, like human resource. Exactly. And everything. Yeah.
And while with treasury bills and bonds, the greatest weakness is the government failing, and if the government failed, then the border would be useless.
By default.
Yes, and only maybe liability is the withholding tax, which is a final tax, because by the time you get your payment, it's already covered.
For the aspect of taxes, let's agree that in life there are only two permanent things: taxes and death. Exactly. That is not something we're going to quarrel about in whichever nation we go to. Now, for the aspect, of course, let's also agree that every financial instrument out there that people are trying to talk about has its challenges. Even what I offer as an insurance plan has its challenges. I am not going to pretend about that. Okay? But like I said, if the treasury bills can't help you afford your cash flow, please get them. Okay? Because you cannot, cash is king. Okay? Cash is king. Especially in a market or in an economy like ours, cash is king, which means the person who knows how to do their cash flow well is a king. They are very good. But then also remember that one of the threats to cash flow is the fact that there are risks that will occur from day to day or time to time. And then it's unfortunate that, of course, that you cannot then begin to force. You do not want a forced sale of your bond in order to cover certain life.
But forced sale happens everywhere. The only reason, maybe with insurance, you may not be able to, but I understand that for certain insurance policies, you can still get a loan against it.
Yeah, you can. Let's also agree about that. You can get.
Of which in Uganda, at most, they may value any asset is up to 60%.
60%?
Yes.
Let me agree with you. Because a forced sale is not something new. It's something that is occurring in the market. It's occurring in the market. Let's agree. What we just need to agree with is what are the conditions that will cause a forced sale? And can we preempt them and see how we can manage them before they come?
I think that's why then I'd mentioned something of buying the bonds and bills under a trust fund. That way, you first of all have directors who want only give a go ahead. Before they give a go ahead of a forced sale, they look at all the other, including the cash flow. Can we wait for cash flow to do this and this?
But then I will always repeat that. Like I've said, the reason why I tell people to buy insurance is very simple. It's because if you have the capacity as a person to deal with risks beyond your financial net worth, if you have the financial capacity to deal with risks beyond your financial net worth, then you don't need insurance. Okay? Because I mean,
but then you see in economy, I think the two great rules is, first of all, time is never, and then you'll never also find enough capital, so you'll never find enough money. So that's cancelled out. It will never happen.
What do you mean by? Okay, I've not understood that one. Please.
Money will never be enough.
Money will never be enough. Yeah, because our needs are usually
exactly. No, as you increase even in levels, it's just how you manage your liabilities to, again, your day to day.
One of the things I remember, I was unfortunate not to have studied economics.
Neither did I. I did sciences.
Oh, okay. Yes. But from the little I remember about my commerce at ordinary level, I got to learn in commerce. We were learning about sole proprietorship in business, when you're opening up a business for small businesses. And so we learned about what is called that one of the challenges that a sole proprietor faces is the fact that they have unlimited liabilities. Let's also talk about that. Unlimited liabilities. Now, we should always remember that in the aspect of financial growth, liabilities should always be taken care of. Okay? Now, of course, as unfortunately in our economy and setting, we always have liabilities. We always have, and there are liabilities which are not because of us, but they could be because, unfortunately, the society is so. You get so. You may find there are liabilities of black tax. Okay, number one. There could also be a liability of us having, every time we face advanced medical challenges, we may need to get out of the country in order for medical, Okay. A few days ago, I saw not a friend, a celebrity, who unfortunately passed away outside the country, and then they had to run a GoFundMe in order for them to, bring him back for burial. You get, but you get, in understanding what Kam has told me about liabilities. That is where I say, even when you are doing your financial growth story, whichever financial growth story you want for yourself or for your organization, financial growth story, be it's your personal financial growth story, be it is your, maybe it is a financial growth story you're running for an investment club. Okay? you should always then, because everyone will have the investment options very clear with them. Okay, and the investment options are quite a number out there. It's very good. But also have a way of managing the liabilities. Look into them. What
Yes,
are
that's
they?
true, yes.
Yes, because
You can't look into investments before you handle your liabilities.
yes, which is very good. First, handle the investments,
The liability.
but then also do not jump the liabilities.
So again, you go back to conclude to what I was saying of invest first, then
Deal
go for
with
life insurance after.
Yes, but then
So that
also
because you
listen-
invest to get a cash flow, to then get a cash flow to cover. Because what I look at is if you have a trust fund or a unit trust and it's where of both the bonds,
Yeah.
then when you get life insurance, it pours into the trust fund that buys the bonds that covers more life insurance. You buy a bigger policy.
okay, you can buy the policy.
Yeah.
One of the challenges, of course, about is that investments. One of the things I envy about investments is that they really rebirthing the, what do you call it, like giving the outcomes. They mature quickly.
Depends which
Okay,
year
depends.
you get.
But because there are these shorter treasury bills of 91 days,
Yeah.
am I right? Which give you your bond coupon.
You see, when you mention life insurance for a person because it doesn't mature quickly, that means a person who can't be that patient and is investing in life insurance doesn't have the patience or the financial discipline to even handle the insurance policy itself. It's guaranteed.
It's guaranteed.
I'm a trader. I've been trading for 5 years.
Wow,
And I know for a fact that, like, I'll just look at people who come to me and they'll be like, hey, now I have 5 million I want to trade. And I look at a person trading 100,000 and 5 million and I know who's going to stay longer just by looking at their pattern. So I know, matter of whatever they say, it can be. You have seen people who say Jubilee and Prudential, they phoned me at the bank. Now I wanted to remove my money, the wrong number. Jangumu, come in 7 years, come in 2 years. They don't have the
financial.
exactly, and then they even fail to continue making the payments and they lose the whole thing.
I think it's I think now we are getting to a story where we're almost getting to, what is it called, a meeting point. Now what you're explaining is something, unfortunately, we as a nation need to deal with: financial discipline. Because we're not going to blame the policy or the treasury bills for being set the way they are set, or even in your forex, in your trading, I made a mistake, in your trading aspect, because